Hello, if you've been wondering why your own specific investments are down, I wanted to kind of walk you through a practice that you can do to better understand your own investing portfolio and get a better idea of maybe why your portfolio is down more than what you're seeing in the stock market or potentially even less. The inspiration for this video actually is from a conversation that I had with one of my students where she was looking at her portfolio and she's like, oh my gosh, this is so scary. Why is everything so down? We went through and we walked through her portfolio, and the reason her portfolio specifically was down even more than like if you were just 100% invested in the S&P 500 is because her portfolio is a lot more aggressive than just investing in the S&P 500. With that comes a lot more volatility, a lot more ups and downs, which we love when things are good, but we don't always love when things aren't so good. So what I wanted to do is walk you through this practice where you can kind of look at your own portfolio and get a better understanding of why your portfolio might be doing better or worse than the S&P 500. By the way, just to get it out of the way, the S&P 500, that is just a grouping of 500 of the largest stocks in the US inside of it. That's what we're referring to. So think the biggest publicly traded companies in the US and I mean in the world as well. So like your Apple, Amazon, Google, Tesla, etc. So cool, let's go ahead and dive in so that you can get a better understanding of what might be going on in your own portfolio. So I'm gonna go ahead and share my screen. We'll zoom in a little bit on this, and then I will pull my face up as well. If I can figure out how to do that, I sure can. Hello guys. Okay, so what I did is I actually pulled up some real life investments that she actually showed me. That's over on the right-hand side of the page. And then I also just pulled up my good old Google over here. So what we're going to be doing is we're going to be taking a look at these investments over on the right and help you understand what they're doing versus what the overall market is doing. So for reference, the overall market right now, we can use the S&P 500 first. The S&P 500 overall today is, we're looking at it being up 0.5%, but when we look at year to date, we're looking at it being down about 5%, which isn't crazy. I mean, again, back in 2022, we were seeing dips of like 20% with the S&P 500. We're not really in crash territory here. It's just, I understand, you know, when you're new at investing and when there's a lot going on in the world, it's easy to be scared by things like this because you're a new investor and you're not entirely sure what's going on, right? So this is what we'll refer to as what the market is doing. If we wanted to also look at the NASDAQ 100, which is really focusing on the tech sector specifically, the NASDAQ 100, you can see it's up 1% today, but year to date, it's down almost 7%, so 6.58%. So down a little bit more than the S&P 500, but the NASDAQ's gonna have a lot more tech stocks inside of it. It's gonna be more growth oriented, so that does make sense. So let's go ahead and do the practice that I just mentioned of taking a look at some of the investments that she had in her own portfolio. So I'm kind of new to this technology, so thanks for bearing with me as Colo Bear figures this stuff out. And then over here, I'm just gonna zoom in a little bit. Oh, and remember guys, I said I was gonna do YouTube this year. That didn't mean that my YouTubing was gonna be perfect. So what I'm gonna do is move this down and move this down. So I'm using Ecamm Live, which I'm really enjoying. So I hope you guys enjoy this very casual approach to YouTube because this is how I'm gonna get it done. So over here, this is what we've got in terms of just a couple of the investments that my student had inside of her portfolio. I wanted to show you kind of what I showed her so she could get a better understanding of why her investments are doing worse than what the S&P 500 is doing this year. So keep that in mind, the S&P 500, we use this often as like a gold standard because it's 500 of the largest companies in the US inside of it, so it's easy to use it as the gold standard. It's really hard to beat the S&P 500. So let's take a look at it. So we've got year to date 4.59% down for the S&P 500 that we're referring to as essentially what the market is doing. One of her first investments was FZILX. Okay, so what we're gonna do, and this is what you can do at home as well, is you're gonna pull up FZILX or whatever investment that you're trying to look at right now. Okay, so right away we can see this is not the S&P 500. This is an international index fund. So we already know this is going to perform differently than how the S&P 500 is going to perform. It should, because it's not the same stocks. So as you can see, today it's up 0.67%. Year to date, it's up 6.53%. So this is a really good lesson in why we still want to have international inside of our portfolios, especially, I mean, I say international as somebody who resides in the US. A lot of people, when they compare international stocks to something like the S&P 500, they're like, why would I want to invest in the international market when it's doing so much worse than the S&P 500? Well, when the S&P 500 is not doing well, sometimes the international market is doing better. So you're kind of having that diversification that becomes really, really important when you get to retirement, because if we had 100% of our money invested in the S&P 500 right now, our entire portfolio would be down 5%. But if you just had a portion of your portfolio that was dedicated to something like the international market, FZILX, well, then you have options on where you want to take your money from. Obviously, we wouldn't want to have to take from our money in our stocks that are down, like the S&P 500 right now, but if we're at retirement age and we have this diversification and we see, hey, no worries, my international stocks are up 5% or up 6% this year, that's where I'm gonna take that money from. So you can see right away, part of her portfolio should actually be doing better than what the actual market here in the US is doing right now, because she's got international stocks, okay? Now let's look at another one. So FZILX, she's also got an individual stock, DK or DraftKings essentially in there. She's got like a spattering of individual stocks in there. Now you can already see, okay, this is down this year. When we look at year to date, this is still up 6.45%. So again, this particular one should also be up this year for her, balancing out whichever ones of her investments are down this year, okay? So again, this is also gonna be different. We wouldn't expect it to perform according to the S&P 500 because it's an individual stock. All right, now the next one that she has a large portion of her portfolio in is FSPGX. So this is where we've probably found the culprit. Okay, this last month, FSPGX is down 11.37%. Why is that? Well, it's because this is a growth fund. Remember what I said earlier? When we're talking about growth funds, they're going to be more aggressive than just your large blend fund that contains a little bit of everything inside of it, like the S&P 500. With a growth fund, the entire purpose of the stocks inside of this growth fund are for it to be aggressive and to grow significantly and reinvest all of its profits back into the company because they're posed to grow. So we can expect more volatility than the S&P 500 with this growth fund. Even though they're both large cap, which means that they're large companies, this one's geared towards growth, so you're gonna have more volatility. You can already see the 1 month is down 11%. When we look at the 1 month for the S&P 500, the S&P 500 is only down 7% in the last month. But when we look at the year to date it's down 4.5%. Year to date for this one, it's down almost 10%. This is likely why her portfolio is seeing more downs in her portfolio. She's seeing more of a loss, even though she hasn't sold, than what she's seeing with the S&P 500, with her large cap regular blends or her international stocks, is because this is a more aggressive portfolio, which means we're gonna have higher highs and higher lows, okay? Hopefully that makes a little bit of sense. Tell me in the caption if that makes more sense, and let me know what questions you have too. I know there's a lot of jargon. If you haven't been to our free investing class, I highly recommend checking it out. That's available at lazyinvestingclass.com. You're gonna learn a lot about index funds and what the stock market does over the long term to kind of give you some peace of mind and also help you understand how I do recommend you invest so that you don't have to worry about these types of ups and downs. Now, granted, everybody's gonna worry about these ups and downs when they're a new investor. That's why I'm walking this through with you and also with one of my newer lazy investors as well. So we've got FSPGX. Now let's look at the next one. We've got FSMAX. All right, that is a extended market fund. So what that means is it's going to have mid-sized companies and small companies inside of it, okay? So instead of a small cap fund or a mid cap fund, this is extended. It's gonna say, I'm gonna have everything basically except for large cap in here. Guess what that means? That means more volatility, because it's not a big company. It's not big companies. It's not large companies that can withstand the up and downs. These are going to be a lot more volatile. So you can see the 1 month loss is 12%. The year to date loss is 10%. So this is another reason her portfolio is down right now. This does not mean that you shouldn't be invested in these things. We still want diversification. This is why it's really, really important to understand your own investor type and how diversified you need to be in order to have a portfolio not only that's right for you, but that you can actually stomach as well. One of the things that we talked about with her specifically is that maybe we need to make her portfolio a little less growth oriented and a little more stable so that she doesn't worry or get scared anytime there's ups and downs, which if you're going to be invested for the next 30 years, you can expect to have some big ups and downs every 2 years, really. I think 2 years is the average amount of time that we have a correction with the stock market. So, which I don't even think we're in correction territory yet. I haven't been paying much attention because honestly, I'm not worried about it. But if you have questions about it or want me to do a video about it, let me know. We can talk about corrections and things like that. Comment correction down below if you would like me to do a video about corrections in general. So again, this is really why she's, again, with this fund, going to see a bigger dip than what we're seeing with just the S&P 500 or even with the NASDAQ. So you're gonna see a bigger dip, and that's why her portfolio is seeing a bigger dip. So do you see kind of how that education gives you more context for why things are going the way they are, or why your portfolio may not be doing as well as the market is doing, or as bad as the market is doing? So let's look at the next one. The next one is another individual stock, NVIDIA. So NVIDIA, a lot of people jumped on buying NVIDIA. I believe it was last year, if not the year before. Today, it's up 6.43%. The last month, it's down almost 12%. And year to date, it's down almost 16%. So depending on how much money she has in this particular individual stock, it's doing significantly worse than what the overall market is doing. And so that's why, if you're personally invested in NVIDIA, you might be feeling a little freaked out as well. This is why I don't recommend buying individual stocks unless it's a really small portion of your portfolio that you're comfortable gambling with, because that's essentially what you're doing. With individual stocks, we have no idea what's going to happen over the long term. All the rules that you've learned from me, the stay invested over the long term, chill and build, that does not apply when we're talking about individual stocks. Individual stocks is like no man's land. It's gambling. We have no idea what's going to happen with an individual stock on any given day. So again, though, this is why she's seeing a bigger swing, is because she's got some aggressive stocks inside of her portfolio. Whether or not she chooses to hold on to these, it's up to her. Like I said, when we're talking about individual stocks, I highly recommend only investing what you're willing to lose, okay? Excuse me, guys. Check out my big old, not a Stanley, a knockoff that I will be using forever. Okay, so the final one that I pulled up from her list is SCHD, which is a Schwab US Dividend Equity ETF. That's a really long way to say that it's an index fund that is focused on paying dividends to the investor, okay? And specifically focusing on US stocks. I assume these are probably large cap, but I haven't looked inside of it. So today, it's down 1%. Year to date, it's up 0.6%. So this shouldn't be contributing to what she's seeing in terms of a loss. Yes, this month it's down, but it's staying pretty stable. It's not seeing any like really wide swings. If you look at the maximum, it's heading in a similar direction that the S&P 500 is going, just in a slower, more plateaued way. So I wouldn't consider this a contributor to why her portfolio is seeing bigger swings. It's just staying chill. So anyway, I hope you found this helpful. Let me go ahead and remove my screen. How do I do that? I do it like this. Now you get double Chloe's. So anyway, this is my second YouTube video this year. I hope you're enjoying it. If there's questions that you have, please feel free to ask below. If I get enough of those questions, I'll be happy to do a video on that. If you want me to do a video on corrections, just comment corrections. But thank you so much for watching. I hope this made you feel better. I hope this gave you some ideas. And if you're watching this and you're like, man, I'm confused, I don't understand the first thing about investing or in indexes or any of that stuff, again, I highly recommend you check out our free investing class. class. Our students love it. We've had over 100,000 people attend it. Not only will you learn about investing and compound interest and things along those lines, but I'll also talk about how you can work with me if that's something that's of interest to you. No worries if not. And then I stick around for a Q&A at the end. So that's available at lazyinvestingclass.com, or you can check the show notes out for a link directly. So thanks for stopping by. If you enjoyed this video, let me know so I keep doing more of them, all right? I'll see you guys next time.